Good morning, everyone, and welcome to the morning market review. My name is Russell Shaw. I'm a senior market specialist at FXCM, and today is Friday. It's the 17th of March. My email address rshaw@fxcm.com. Just going to bring up our disclaimers. Here's the high risk investment warning. I'll keep this on screen for a few moments. Can I just double check that you guys can see the screen, hear me, and see me? Okay, thanks Shadrach. Awesome. Thanks Anna. All right, let's just bring up the market commentaries disclaimer. I'll keep that on screen for a few moments as well. Okay, we'll just take a look at market scope today. I don't have a lot on in my notes here, so I want to do a US dollar analysis. I want to take a look at pound US dollar. I want to take a look at NASDAQ. I think our analysis on NASDAQ's been pretty good. We don't always get it right, but when we do, it's quite satisfying. And we'll take a look at the DAX 30, which is quite challenging at the moment. Hi, Michael. Morning to you. Nice to have you on the webinar. All right, references, market scope. We won't look at trading view today. We're just going to take a look at market scope. I want to bring up the US dollar weekly chart first. And if I can get you guys just to focus on the RSI just at this point. So you can see here the RSI is above 50. So above 50 is the bullish side of the oscillator. And you can see that when it's above 50, you get a nice movement up. It's effectively a momentum indicator above 50, showing you which side the momentum's on. Now, it's interesting that you can see that it looks like it's about to change, isn't it? So what we want to do is we want to just keep an eye on the RSI to see if it dips below 50. Last time it dipped below 50, we had a sell down in the US dollar over an extended period. So we just want to keep an eye on this. The momentum indicators just starting to give a clue potentially of what could be happening here. Now, the next thing I want to draw your attention to, I just want to bring up Microsoft Paint. Remember the trend of a market, it ebbs and flows, it zigs and zags. Eventually the trend is going to end. When it ends, you kind of get something like this. Okay, obviously this is theoretical, but you can see that we've got a left shoulder head and a right shoulder. So that's really what a head and shoulders is. It's really just a trend change. So let's take a look here, and I can put in here sort of left shoulder, head, and here I'm going to put right shoulder question mark, because I don't know if this is a right shoulder or not. We'll only know after the fact, but kind of, if we take this as the left shoulder, if we take this as the left shoulder, then the neckline would look more like that. Okay, so it looks as if there is some sort of topping pattern that's taking place on the US dollar now. That would have to be accompanied by a more dovish Fed. Okay, it can't be accompanied by a hawkish Fed. So we're just going to have to watch what happens on the 22nd, which is on Wednesday, and see what kind of communication comes out. Yesterday we took a look at the inflation story. The PPI seems to be leading core inflation down. We also looked at the 2-year, and it looked like the 2-year was indicating we're pretty close to the apex of the current rate hiking cycle. So that's potentially what we're seeing in this topping pattern here. And then we've got an extra clue here. we've got a reference candle reversal. You guys see that? So I'll show you what that means. So we're looking for a candle that's got the highest high. Okay. Here's the candle with the highest high. And then the candle to the right of it, in its simple form, needs to take out the reference candle's low. We've done that. And it needs to close below the reference candle's low. Well, we'll only know that at the end of trade today because of the weekly candle. So you can see that potentially we're getting a turning point over here. And if we get a turning point over here, we're going to see if it reaches the neckline. And if it reaches the neckline, then we potentially got this topping pattern here. Keep an eye on the RSI. It looks like it's about a dip below 50. And then the technicals are okay, but we've got to match it with the fundamentals. There's no two ways about that. Technicals by themselves are not as powerful as technicals with fundamentals. So the fundamentals, we got to look at the Federal Reserve, see what's happening there. If we take a look at the daily chart here, we get some extra information. You can see that we've dropped down into zone 3. Zone 3 is between the lower blue and the lower red. Okay, now keep an eye on the stochastic. Look where the stochastic is. It's almost in that lower quintile. It's almost dropped below 20. If it drops below 20, then we get that downwards momentum on the daily. Well, that would kind of sync up nicely with what we're seeing on the weekly chart, wouldn't it? So the fact of the matter is we're getting a very interesting stochastic here. The longer it stays under 20, the bigger the momentum is going to be. There's no oversold condition on a stochastic. Okay, mathematically it doesn't make sense if you take a look at the formula, but momentum wise, under 20 shows a very strong downwards momentum. All right, so that's the US dollar. Let's just take a look at the pound US dollar cable. So if the dollar is looking weak, okay, what's cable looking like? And here we've got some sort of sideways pattern. Okay, some sort of sideways pattern. And if we take a look at just the last 3 candles, let's take a look at this in terms of reference candles. Okay. So the lowest low in at least 3 candles. Well, here it is, the lowest low in at least 3 candles. Price taking out the reference candles high. Price taking out the reference candles high. And then it looks like it's going to close above it. We'll just have to wait until, because it's not a complete candle, right? So we'll just have to wait and see if we close above it today. Take a look at that RSI. RSI is popping above 50. If it pops above 50 and holds, and the US dollar drops below 50 and holds, then we've got momentum driving the market, right? With all the banking uncertainty, no flight to the dollar haven. Yeah, there certainly can be. Flight to the dollar haven. I think what's going to be largely driving the market, though, is really the Federal Reserve policy. I think that there's 11 banks that came out that gave First Republic, I think it was $30 billion. So the banking crisis seems to be dissipating quite quickly. It's not to say that the uncertainty has disappeared. It certainly can still be there, but it looks to be dissipating. And I think that my personal feel here, and this is a huge statement, and it's subject to correction, and please don't take this as anything but a speculation, but I think we're in a bull market. And I think what we're doing is I think that we're climbing the wall of worry. And I think this is just part of that worry. Is do we think the U.S. banking system is going to fail? I absolutely don't think it's going to fail. I think that the U.S. banking system is actually quite resilient. I think that we have seen some problems in it, and I think that the authorities and the regulators and the other banks have come up with a plan to move forward and reinvigorate and stabilize the banking sector. I could be completely misjudging the situation. I admit that, and we're going to have to watch to see how it unfolds. That's why I think that the driver of the market is going to be monetary policy more than anything else. Yeah, Gertie's just saying it looks as if all the indicators and everything's falling into place here. We're going to have to monitor. We have to monitor this very, very carefully, but it does look to me as if we're getting some sort of pullbacks. Remember, there's always going to be a narrative with a pullback. In a bull or a bear market, there's going to be a narrative. In a bear market, the narrative is usually a bear market rally, okay? And in a bull market, it's usually, well, it's the end of the bull market. I don't think that's the case. And I think that when we take a look at the NASDAQ, the case will be made for that. Just before we get to the NASDAQ, let's go to the pound US dollar. And you can see we've moved into zone 1, and this is the cable daily. And if we take a look, we've got the pound US dollar sitting in zone 1 between the upper red and upper blue. All right. Take a look where we are in terms of the stochastic. Now, as long as we hold the stochastic here, there's going to be upwards pressure. The longer we maintain this upper quintile, the longer we stay in zone 1, the more support there is for the pound US dollar. Well, that's only going to happen if the US dollar weakens, okay? So we have to see some sort of weakness in the US dollar. Well, that's only going to happen if we get some sort of relaxation in terms of the monetary policy. These are big ifs, okay? We'll have more clarity. We'll have more clarity over these on Thursday morning. We'll talk about it. If we bring up the NASDAQ, if we take and I think our analysis of the NASDAQ has been terrific. Let me just bring that up. So what we've got here is the higher trough, higher peak. Take a look at the candlestick for this week. This is an unreal candlestick. Yesterday, I don't know if you guys recall, when we combined the two candlesticks, we came up with a dragonfly doji. Do you guys remember that? We don't have a dragonfly doji anymore. We've got a really good looking strong candle, really terrific price action on the NASDAQ, and right at this resistance turn support, which we highlighted. And if we go back to this over here, these levels, okay, so you can see it's kind of pulled back nicely. And if we take a look at the daily chart here, it's in that zone 1. Look at the Bollinger's on zone 1. Look how they're starting to pull apart. Take a look at that stochastic. Is it going to reach the 80 and hold? And if it reaches that 80 and holds, then we get the next level in that NASDAQ. What did we say the pattern was? We said it was a flag. Look at that breakout. Look at that breakout of that flag. So really nice when it works out like that. The DAX is less clear. Let's just have a quick look at the DAX. The primary trend in the DAX is actually a good-looking trend. I think this is probably one of the best trends we've got at the moment, a higher trough, higher peak, and then it looks like this could be the next higher trough. We just got to get the reference candle here. Where it breaks down is on the daily. The daily, unfortunately, we still in zone 3 here, and I'm hoping that we can get above zone 3, get into zone 2 between the two blues. So moving from that bear area into the neutral area, well, that would be a relative move forward, wouldn't it? It's easier to see on this. Chart over here. So we drew in the support level yesterday. It looks as if we're getting the 3 candles. 1, 2, 3. Okay. It looks like we're getting that. We'll see at the end of the day. But the idea here is if we get the 3 candles, then we potentially get the trough. And if we get the trough in on the daily, we potentially get the trough in on the weekly, and then we start moving on that next leg higher. I think that it's going to be very much a function of next week's monetary policy meeting. Next week's monetary policy meeting become incredibly important. Okay. That's as much as I've got for you today. We'll conclude at this point. If there are any questions, please go ahead and type those in. Any questions, go ahead and type those in. So I like, Gurdeep, I really like the way how everything seems to be falling in place. Let's not get complacent. Always use risk management, always use stop losses, but you guys know that. All right, no comments coming through. So let's conclude at this point. I want to thank everyone for joining this morning. I really appreciate it. I want to wish everyone a good day and a good weekend ahead, and we shall speak on Monday morning. Thanks very much, guys.